Hi everyone, in this video I'm going to answer the question which EV stock is the better buy, Xpeng or Lucid, and I'm going to measure them across 5 different metrics, starting with revenue growth, which I have pulled up on the screen right now. And looking at Xpeng, its revenue is much higher than Lucid. Of course, it had an earlier start than Lucid in terms of ramping up manufacturing. Still, 996 million in revenue in its most recent quarter. That was down from a peak over 1.2 billion. And then Lucid is just now expanding its manufacturing output and reaching revenue in its most recent quarter of 195 million. Next, let's look at operating income between these two companies, looking at trailing 12 months. And in this regard, they're both downward trajectory, which is not good news for investors. Xpeng at 1.3 billion in operating losses in its trailing 12 months. Lucid Group, meanwhile, 2.33 billion in operating losses in its trailing 12 months. That could partly be explained by Xpeng's greater revenue and further along the path of ramping up manufacturing, whereas Lucid is just kind of getting underway. And so a lot of the investments it's made in manufacturing and research and development is just now beginning to get leveraged with revenue growth. Still, neither of these companies showing any signs of approaching profitability, so investors should expect a long ride ahead before these companies reach profit positive levels. Next, let's look at cash and equivalents because, of course, if they're losing a lot of money with their ramping up production, we want to see how much cash they have, so how long they have in terms of ramping up output. And in this regard, they have similar amounts of cash, 1.6 billion for Xpeng and 1.26 billion for Lucid. So not much of a difference in this regard, especially considering the amount of money they're both burning through in terms of ramping up output. Next, let's look at inventories because I want to look at if they're able to sell whatever it is they're producing or if they're having to hang on to some of this inventory. And inventories has been rising. This has been a troubling trend in the EV industry in recent months. This wasn't the case. There was large backlogs earlier in 2020, 21, and 2022. Now we're seeing some months where companies are not delivering all of their production. So they're producing maybe 1,000 vehicles and they're delivering only 900, and maybe they're getting stuck with 100 models, or maybe they're in transit, they haven't been delivered yet, or maybe they haven't been sold yet, or so this is not good news, specifically because they're short on cash, right? And you want to get these vehicles out and delivered as soon as possible so that you can turn this cash flow and receive that cash flow and turn it into more manufacturing output, right? Use that money to get more materials so you can ramp up production. It's not a good news if you're getting stuck with these and it's taking longer to deliver, or maybe some of them are not even selling. So this is a little bit of a concern. And for both companies, right? They're both seeing a rising inventory levels. Finally, let's look at valuation to make the decision which one is the better buy. And I chose to use the price to sales ratio because they're both losing money on the bottom line and they're both not cash flow positive. So the metrics I chose to use is the price to sales ratio. And in this regard, Lucid at 38.76 is way more expensive than Xpeng at 1.785. Again, this is not very informative because Lucid is just ramping up production, and so investors are kind of foreseeing that Lucid's gonna increase sales very quickly in the near term, and so this price to sales ratio might be a little bit misleading. Regardless of that, I still going to say between these two, which one is the better buy. I'm going to say Xpeng is the better buy just because it's further along in the process of ramping up production. And as you're noticing, if you're an EV stock investor, as you're noticing, it's difficult to ramp up manufacturing. This is not an easy thing to do. Manufacturing cars is expensive, difficult, and time consuming. And so the fact that it's ahead a little bit I'm going to give it that advantage in this regard. And of course, the cheaper valuation doesn't hurt its cause. So between these two, Xpeng is the better stock to buy. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.